Hey folks, look what's going on with mortgage rates. We saw almost across the board at least 0.1% lower in rates in just one day. Look at the 15-year fix. It's down almost 0.25% in just one day. So what's going on? Well, my name is Dan Frio. I do this report on a daily basis to keep you guys informed of real estate. We talk about real estate values. We talk about real estate rates. We talk about real estate markets and programs to get you into a house if that's what you're looking to do. So without further ado, let's get over and figure out why rates are dropping so much, because just 3 weeks ago, rates were 8. Now they've dropped almost 1% in less than 30 days. Let's go figure out why. So the first thing we have, the news today, is right here. The Federal Reserve, their favorite gauge of inflation is what's called the PCE. The number came in and actually it rose 0.2 in October at a 3.5 pace for the year. Is right in line with expectations. But the expectations were lower than where we were last month. So that's fantastic news. So let's really go in and take a deep dive of these numbers. So the first thing we want to see is, what is PCE? Well, basically PCE is the inflation number that the Federal Reserve puts the most weight into. Okay, they really focus in on what's called the core PCE number. So if you look at this, if we click this, it's going to explain to you what the core means. So let's go down through here and explain it. The core PCE price index is the less volatile measure of the PCE price index, which excludes the more volatile and seasonal food and energy prices. The impact on the currency may go both ways. A rise in inflation may lead to a rise in interest rates and a rise in local currencies. On the other hand, during a recession, a rise in inflation may lead to a deeper recession and therefore a fall in local currency. So basically, that's what it is. All right, so what the Federal Reserve monitors is right here. The core PCE right here on year over year and month over month. Okay, this number recently was close to 9% not too long ago. So we're making huge progress. The last reading we had was 3.7%. It was expected to go down to 3.5%, and it did. It dropped to 3.5%. So we're on our way down to those key levels that the Federal Reserve really, really wants. Okay, now you look at core PCE. That was year over year. This is month over month. So previous month was 0.3. It now is 0.2. Is estimated, and it came in at 0.2. Okay, so that's one big piece of this. It's saying inflation is coming down. Now, when you look at just the PCE index, not the core that excludes food and energy and all that stuff, because food prices are going up, energy prices are stagnating, but there's other pieces of the puzzle that basically made this come in at 3.5. But if you just look at the PCE by itself, look at these numbers. PCE year over year was 3.4, now it's at 3. Okay, that's fantastic news. And then look month over month. It was 4, now it's 0. Okay, so we're taking a huge bite out of that number. Now, here's another piece that's actually exciting news for, well, I'll say the markets, because it'll help interest rates. But it's saying right here, personal spending, how much you and I are spending. Remember the Federal Reserve, they don't want us to spend anymore because that's what's driving inflation. Well, we have our spending numbers came in. Previous number was 0.7. This number is starting to crash, folks. It's coming in at 0.2. So that is fantastic news. That means people are spending less, and that's starting to really drive down prices. Okay, so there's a little bit more to this equation, because what also came in was how many people have lost their job. Okay, so initial jobless claims. You're seeing that right here. The Federal Reserve, the federal government they would love to have this number at about 300,000. Well, it kind of skipped. It's skipping around the 210, 220 mark. So last reading was 211. This one came at 218, a little bit higher. But I'll say the good news, but the bad news is right here. We have more and more and more people that are staying on unemployment. They're having a tough time getting a job. Last readings, or the last 6 readings, we've been under 1.8 million. Under 1.8 million. Now we're all teetering on 2 million people on continued jobless claims. So that's a little bit of a concern for me. But with the Federal Reserve, they're saying, okay, more and more people are losing their job. Okay, so they're starting to tighten their belt. So they're spending less. This is right in the realm of what we're looking to do. So good news for the Fed is actually bad news for me and you a lot of times. So that's basically what's going on in today's news. So how's this affecting the markets? Well, let's look at the stock market, because I think the stock market's rallying big time right now because of this news. Let's get over to this pre-market, and let's see what the Dow Jones is doing. We have what do we got here? Let's just go to CNBC's main site. The Dow Jones jumps over 180 points, approaching a 2023 high after cooling inflation data. So that's going to be the headlines completely for today. So what's happening to the bond market? Well, the bond market's having a little bit of a sell-off. Why? Well, here's what we're watching. Here's what I watch on a daily basis. I watch this right here. Why? Well, this is a mortgage bond. It's a mortgage bond that trades on Wall Street. We watch the price, which is right here, because if the price drops, which you're seeing right there, if the price drops, rates are going to go up. Okay, so what we've seen, if you look at this number, let's go to a 5-day chart. Look at this rally. We had a huge rally. So again, when the prices go up, rates come down. Okay, there's an inverse relationship here. So prices go up, rates come down. Prices go down, rates go up. So what's happening, I think, right here is just positioning. People have made a bet that this price was going to go up and up and up. Think of it as a stock. If you bought this stock and it rallied this much in a week, what would you do? You'd probably sell a little bit of your position if you were smart, take a little bit of profits. I think that's what's happening because the news for today is actually really good news. So we'll see how this floats out throughout the rest of the day. But the nice thing is mortgage rates are coming down and we should be hopefully in the 6s by January as long as nothing really throws us a curveball. So my name is Dan Frio. What do? I'm a mortgage advisor. So if you're out there and you're looking to maybe refinance, look into a home equity loan, you're looking to buy maybe your first house or maybe first investment property, we would love to help you. How do we do that? Well, I'm actually I have a federal license, so meaning I can help clients all over the country because I'm licensed in all 50 states as well as Puerto Rico. Plus, we're also one of the country's largest mortgage brokerages. I just did a new count of how many banks we are set up with that we can use their programs and their rates, and it's about 63 right now. So what we do is we look at your scenario and we say, okay, at our bank, here's what we can offer you, but I have over 60 different banks. I can offer you their programs and their rates. Who else can do that for you? It's basically one application, one credit pool, and we're going to shop your loan over 60 different lenders out there to see and make sure you're getting the best rate and the best terms out there. So what happens if you're already locked in with another bank and rates are down dramatically? Well, if you're one of our customers, you might have gotten a call within the last few days saying, hey, great news. We just moved you to another lender and we're getting you a much better rate. But if you're out there with another bank or another credit union or mortgage company and you're locked in, you're locked in. You're stuck. What do? Well, reach out to us. We'd love to analyze your loan estimate or your loan scenario to see is there something better out there for you. So how to do that? Click the loan estimate tab right up there. What you're going to do is upload your loan estimate into there. It's going to come to me directly. I'm going to do a loan comparison, comparing the loan you have versus the loan that we can get you, good or bad. I'm going to show you, hey, they won, stick with them, or we won, and here's how much money you can save. So, but if you're out there and you're like, hey, Dan, I'd really like to see if I can buy a house in this market. What can I afford? How much can I afford? Well, click the Apply Now button right up there. What it's going to do is it's going to ask you a few questions. Based on the answers to those questions, you're going to be assigned to a mortgage specialist on my team, might even be me, to reach out to you to go over your scenario, kind of make sure we answer all your questions before you apply for that loan. And then we're going to work with you to get you pre-qualified as quick as we can. So that's it for today, guys. I hope you appreciate my videos and that you get educated on a daily basis. If you haven't subscribed yet, please do. That link is right down below. But otherwise, thanks you so much for watching. God bless, and I hope to see you tomorrow. Take care. Bye-bye.